This chapter will discuss the securities market, and quite simply, securities are stocks and bonds. The securities market is where individual investors and institutional investors can go to purchase securities, stocks or bonds. And we'll learn that there's different kinds of stocks, and we'll learn a little bit more about stock exchanges as we continue on here. As we just mentioned, the securities market allows firms to sell stocks and bonds for financial needs, and it also provides a place for investors to buy and sell. And as most of you should be aware, the price of those stocks and bonds does fluctuate a little bit depending on the perceived value of that company. The stock exchanges is where the transactions take place, and the most popular stock exchange is the New York Stock Exchange, but there's also the NASDAQ, and then there's the over-the-counter market for stocks that are not necessarily listed on a national exchange. When a company decides to distribute part of their profits to the shareholders, those are called dividends. And we discussed dividends a little bit when we talked about double taxation, which is one of the disadvantages of a corporation. But the corporation must pay taxes on the profits, and then if it distributes those profits, the individual investors must also pay taxes on those dividends. A company can issue two classes of stock, common and preferred. Common is the ones they issue most commonly. Common stockholders can actually vote. Preferred stockholders, the advantage of being a preferred stockholder is that should the company have to liquidate or go bankrupt, preferred stockholders are a little further up the line to get paid quicker than common stock. When an investor invests in stock, they're hoping that either dividends will be paid on that stock based on the corporation's profits, or they're hoping that the price of the stock goes up, increasing the value of their investment. But in either case, they don't get interest. Bonds, on the other hand, pay interest. And bonds are like an IOU that the firm issues. And the price of bonds can go up and down depending on what normal interest rates are, and also what the bond rating of that particular company is. If you're thinking about investing yourself, you should be really familiar with the term diversification. Diversification simply means don't put all your eggs in one basket. Spread your investment dollars out into many different companies and different types of investments. If you follow the stock market at all, you've probably heard the terms bulls and bears. Bulls are investors who predict or think that the stock prices are going to go up, and bears are a little fearful, a little timid because they're expecting the prices to decline. There's a lot of important information in this chapter. Spend some time with it, learn a little bit more about bonds and how bonds are valued. You'll learn about mutual funds and other more detailed information about stock exchanges.